What's up, everyone? It's Vijayendra Sharon, and with the current state of the economy, it's more important than ever to protect your investments. I'm not talking about timing the market or panicking over every dip. I'm talking about building a resilient financial strategy that can weather any storm. We're going to dive deep into 7 crucial tips that can help you navigate these uncertain times. Whether you're just starting out or you're a seasoned investor, these strategies will provide you with the knowledge and confidence to make informed financial decisions. So grab a notebook and let's get started. The first and most important step is to avoid taking on new debt. I know it's tempting to think about that new car or a home renovation, but trust me, now is the time to be extra cautious. When the economy is uncertain, the last thing you want is to be burdened with high interest payments. Remember, job security can be shaky during these times, and the last thing you need is the added stress of debt. Focus on living within your means and prioritize saving over spending. That way, you'll be in a much stronger position to handle whatever comes your way. If you're already carrying debt, don't panic, but it's time to get serious about paying it down. Start by creating a budget and identifying areas where you can cut back on expenses. Then, prioritize paying down your highest interest debts first. This might mean putting a pause on investing for a little bit, and that's okay. Remember, paying down debt is an investment in itself. It's like getting a guaranteed return on your money by saving on those interest charges. Plus, reducing your debt will give you more financial flexibility and peace of mind. All right, now let's talk about building a safety net. In these uncertain times, having a solid emergency fund is absolutely crucial. I'm talking about having enough cash saved up to cover at least 2 years of living expenses. This might seem like a lot, but trust me, it's better to be safe than sorry. An emergency fund will give you the peace of mind knowing that you can handle unexpected expenses, job loss, or any other financial curveballs that life throws your way. Remember, this fund is for emergencies only, not for impulse purchases or vacations. Now, for those of you who are investing for the long haul, it's important to stay the course. I know it's easy to get caught up in the day-to-day market fluctuations, but remember, investing is a marathon, not a sprint. If your investment goals are 10 years or more away, don't panic sell just because the market is going through a rough patch. History has shown time and time again that the market recovers, and those who stay invested for the long term are the ones who come out ahead. Chapter 5. Gradually shift from risky to low-risk assets. However, if your financial goals are within the next 3 to 4 years, it's a good idea to start gradually shifting your portfolio towards more conservative investments. This means moving some of your money from higher-risk assets like stocks to lower-risk options like bonds or even cash. By doing this, you'll be protecting your capital and reducing the potential for losses as you get closer to needing the money. Remember, it's all about managing risk and making sure your investments align with your time horizon. Chapter 6. Diversify your portfolio across asset classes. Now, let's talk about diversification. You've probably heard this a million times before, but that's because it's absolutely crucial, especially in uncertain times. Don't put all your eggs in one basket. Instead, spread your investments across different asset classes like stocks, bonds, real estate, and even alternative investments like gold or crypto. By diversifying, you're essentially hedging your bets and reducing the impact of any one investment on your overall portfolio. Remember, diversification is your friend. Chapter 7. Consider the impact of global geopolitics. Last but not least, it's important to stay informed about global events and how they might impact the markets. Keep an eye on geopolitical tensions, trade wars, and other macroeconomic factors. These events can create volatility and uncertainty in the markets, so it's important to be aware of the potential risks. Consider allocating a portion of your portfolio to assets that tend to perform well during times of geopolitical uncertainty, such as gold or government bonds. These assets can act as a hedge against market downturns and provide some stability to your portfolio. So there you have it. 7 essential strategies to help you navigate these uncertain economic times. Remember, it's all about being proactive, staying informed, and making smart financial decisions. By implementing these strategies, you can better protect your financial well-being and position yourself to navigate the challenges posed by global economic uncertainty. Prudence, preparation, and a strategic approach will be key to maintaining stability and achieving your long-term financial goals, even in the face of potential global disruptions.